So looking at the general ledger, at some point in chapter 2, what we were doing was having a transaction and making a balance sheet, then getting a new transaction and making a new balance sheet, and getting another transaction and making a third balance sheet, and so on. And we realized that was a really inefficient way of doing things. In reality, what we're going to do is have a balance sheet at the beginning of the period. So looking at the one on the screen, you can see that's for July. There'll be a balance sheet at the beginning of the month. A bunch of transactions will happen during the month, and then we'll make it just one final balance sheet at the end. So the question now becomes, well, where do these transactions get stored during the month? Where are we going to record them? And the answer to that question is the general ledger. So what's a general ledger? Well, first of all, to learn that, we need to figure out what a ledger account is, or just a ledger. It looks like a big T, and it's got a left side and a right side, and we write the name of the account at the top, e.g. cash at bank. The side on the left is called the debit side, and the side on the right is called the credit side. Every single item in the firm's records will have a ledger account. So for example, there'll be a ledger for debtors, there'll be a ledger for computers, sales, cash at bank, and so on. Every single item will have its own ledger. So collectively, all these ledgers together are what's called the general ledger. So when we have questions referring to the general ledger, it means the entire set of ledgers for the business. The process for recording transactions, what we've been doing is taking the transactions and making a balance sheet. We're going to change that slightly by moving the balance sheet down a little bit, and in between we're going to record all these transactions in the general ledger first, and then we'll make a balance sheet.